This is the Time Is Now podcast, presented by IRG.
Welcome to the Time Is Now podcast, hosted by your team at IRG. I am your host, Justin Villa, and with me today, we have a few guys from the IRG team. We have Diego Cordova, Leo Mills, and Cengiz Bayirli. How are you guys?
Perfect. Doing great.
Perfect. So today we're going to talk about a little bit of a recap of Q1 of 2024. So talk about a little bit of the market overview, where we see things as professionals moving for the rest of the year, and just kind of give our insight on what we've seen just based on the residential and commercial side as realtors. Just right off the bat, guys, let's just talk about a little bit of the market overview, right? The market as a whole, where we've seen things go, how have we seen things evolved from last year, basically a few months ago, and just kind of where is your guys' experience and what do you guys see this market doing?
Yeah, I mean, I think that one of the things that we've seen is, number one, time listed before close is coming down, so the amount of time that listings are spending up is reducing, and transaction volume we've seen go up as well. So we're having more transactions in the first quarter than we did in the last quarter of last year, and obviously the average value of each one of those transactions is trending upwards. So I think the market had a little bit of a chance to kind of find its feet, and now we see things probably not going to get as crazy as we saw 21, 22, but definitely things are starting to pick up.
Yeah, I think one thing to piggyback off of that is the inventory. Mm-hmm. I think we've seen like an interesting inventory low that we haven't seen in many other years.
Exactly.
I mean, you drive through neighborhoods in Coral Gables, Kendall, all that area. I mean, before you would see all these realtor signs for sale, for rent, for everything. Now you don't even see that. You see a lot more construction being done to properties versus signs for sale, for rent, for anything. I mean, people, instead of investing and buying something new or selling their property, they're just fixing up their properties. They're staying in the property. Mm-hmm. And I think that's a different kind of thing that we've seen that we've never seen before, that now is very normal. Mm-hmm. It's unique to see and drive through all these older neighborhoods where now every house is remodeled. Every house looks brand new. They're new impact windows, new driveways, new everything. And
also, exactly, like let's say that we got out of the office right now all together and hop into a car and going north in I-95. What you see is like everywhere there's like these cranes and the projects and everything. You look at like North Bay Village, they're buying like all the lands there is and then building it. The new brands are coming and they're selling in some projects, like I'm not gonna give names now, but some projects sells in like in 1 week or 10 days, like they sell like 200, 300 units just like that, you know? When you have like a product which is like very new to the market and you don't have a competition, and if the price is right, and everyone is buying it because there's so many investment opportunities right now in Miami. There's like so many people moving in and everything from different states, from US, internationally. Miami is, as I always say, like becoming the capital of the world.
Absolutely. I think that the reason why we see, and I believe that what you mean is we see so many projects that like before they even have their sales gallery up, they sell 50% of their inventory, 60% of their inventory. I think people, the smart money, realize that if you invest in Miami right now, in 3 to 5 years, you'll be really happy you did. And the people that have the disposable income that can sit on a property for 3 to 5 years and see that underlying value just increase, those people get it. So I think that when you see that first 40, 50, 60% that sells real quick, it's all of the investors that are like, where can I park my money and get a 10, 12, 14% annualized? Miami real estate is one of those ways to get there.
Definitely.
Yeah, and it helps that the inventory is so low everywhere else, right?
Exactly.
I mean, rentals we're at a low. I mean, in the commercial spaces, even that. I mean, yeah, you have now a lot of developers building that commercial space. You have people like Ken Griffin who are building their literally new huge
towers.
Massive home bases, their HQs here in Miami. But there's still a lack of inventory, even in that aspect of the commercial.
Absolutely.
I mean, I have a few clients now where I'm showing the commercial spaces, and I struggle to just even get 2-3 options.
Yeah.
Like
because they don't have like Class A office space. For example, today there was a news. Apple just is getting into Miami. They are renting a place for 45,000 square feet, if I'm not mistaken. They already rented it, and they are like making their biggest move to Miami, for example.
Yeah, I think it's in Coral Gables.
So these kind of moves is like very important, because when these companies moves, their employees moves, and then they start renting it and stuff like that, and everything keeps going up, right?
Yeah, and I think it's worth mentioning, regardless of the amount of inventory that we're expecting, which I think was like 11,000 condos, like just speaking about condos in December of 2023, there was like 11,000 already approved, either under construction or approved to be built. And even when those 11,000 are delivered, we will be nowhere close. Right? We'll be nowhere close to satisfying the demand that lives here. And I think we live in a bubble, not in the sense of like an economic bubble, but in a bubble that like the financial reality of Miami is not the case anywhere else. In other places, you're seeing property values starting to go down, demand starting to soften, and in Miami, it's like the complete opposite. Prices continue to go up.
Exactly.
Properties are listed for less time. It's crazy.
And Leo, it's a perfect point, because when you look at all the data, as we know, it's like approximately 600 people, let's say 500 people moving to Miami every day. Right. So you multiply by 10, that's 5,000 people in 10 days. So 10,000 people in 20 days. Like in a month, you you finish all that inventory that will be built in 4 years, in a month. So when you think of it, of course the prices are going to keep going up,
I agree.
I mean, this is all about math. So simple, right?
It's very simple. And again, I think that the smart money is starting to realize we're, I think, partially blown away, but then when we'll visit projects and they're like, our penthouse is 45 million, 55 million, 65 million.
But it's selling.
But they're selling, So it's like, it'd be one thing if they're like, our penthouse is 45 million and it doesn't sell, but like every single day we hear about, one of the luxury places selling another or running out of penthouses. Like people are starting to flock, and I know that the return on investment in those hyper premium luxury spaces, right, like a penthouse in a luxury building, the return that you're getting is crazy. I mean, we've seen clients who purchased in some luxury spaces in 2020, 2021 who have already doubled their money. Because the same exact type of unit in that same exact building is selling for twice as much as they paid for it.
Like 2 weeks ago, we were with Justin. We went to do a podcast in a project in Sunny Isles. And the first unit that they sold in a pre-construction project, they are not even in contracts yet, was the penthouse for $92 million. The guy just bought it like that. So, I mean, it's selling at $92 million that we are talking about an apartment, in front of the ocean. So it's not even a house. And then there was this listing in West Palm Beach, like a private island in West Palm, which was being listed for the last 2 years, and it sold for $187 million.
That's the most expensive sale, no?
Exactly, in the US or something like that.
Bezos just spent another $35 million. It's like every single
90 day. Actually, right? 90 and
I think he bought like an addition, like for shits and giggles, whatever. Literally was like, oh, here's another parcel. And again, I think we go back to the fact that like the smart money is starting to realize that no matter what you pay right now, in 3 to 5 years you'll have made your money back. And then extrapolate that 10 years. Like if you have enough time to sit on your investment for 10 years, anything that you buy right now, that $92 million penthouse is going to be worth $150.
Exactly. And as you mentioned, Jeff Bezos, like he moved his like primary residency over here, and he's saving $600 million in taxes. So it doesn't matter if he's spending a couple $100 million and buying it, because it's gonna it's nothing. Instead of giving it away, he's just investing in real estate.
And so simple. That's so true. And I think that speaks to one of the inherent values, right? It's like, okay, you know that you're going to get a return on your investment, but also the legislation environment that we live in here in Florida is very different to many other places. And I think that as an example, New York City, that used to be, and it still is, they're still very expensive. They have $150 million penthouses, 20 of them. But you start to see the tax burden and the business environment from many different perspectives. Florida is friendly for business. Florida is friendly for taxes. Florida is friendly for families. You got the sun. You got the parks. You've got. I mean, we were in Orlando for 4 or 5 days. We went up for business, and we were like, let's just stay a couple more days and go check out Universal, because they just announced. I think it's going to be 5 times the size of the current park. to be delivered in June of 2025.
Mm-hmm.
Disney has just announced that over the next 3 to 5 years, they're going to be investing $17 billion into Orlando. So, we see the bright line extending from Miami
I was just going to say, bright line, boom.
Mm-hmm. Yeah. Miami and Orlando, I believe, are sister cities, and they're benefiting from each other's growth.
Exactly.
We were up in Orlando looking at a lot of pre-construction projects. Obviously not at the same scale, but there's so much new construction in Orlando that it's crazy. Yeah. And literally neighborhoods that within one gated community, you have 3 different, like Jack Nicklaus designed golf courses, and you've got 4 or 5 different neighborhoods inside. Yeah. You've got $1 million house that sleeps, 15 people, 20 people on short-term rentals. Like what we're seeing in South Florida, and even Tampa, Orlando, Southwest Florida, I think it's very exciting and intriguing, because I think that we'll continue to see the same. Yeah. It will only get better from here on out.
100%.
I genuinely believe that.
Even in, for example, when you look at the West Palm Beach, some developers from New York buys in a good location a house, and doesn't even do anything, just wait for a year, and the price goes up 20-30% and resells it.
Exactly.
It's amazing. And the point that you were mentioning about how Florida's tax laws and everything, probably we all know what's happening in California, like the taxes and everything, and people are going crazy because of all those tax burdens, and people are leaving California and moving to different states, and Florida is one of their first choices because of the climate and everything and tax things.
And the benefits that they're giving in states like California to you go and squat in somebody else's apartment, and now as the owner of the household and the residence, you don't even have the right. I read something crazy that in New York, if you don't have hot water on in your unit that you're renting out in the winter, you get charged $250 per day as the landlord. But they don't verify that before they start to bill you. So I could be living in Justin's apartment, and just because I don't like Justin, he just raised my rent. I write the city and I complain and say,
there's no hot water.
There's no hot water. Justin is going to start getting billed $250 per day until we go to that civil court and figure everything out. Justin is liable.
Crazy.
It's crazy. And here in Florida, you see the complete different aspect where you literally have sheriffs saying, if somebody trespasses, do whatever you need to. Take care of it in whatever way you can. And I think that we have a convolution of a lot of things. From an economic standpoint, there's so many beneficial things, but also from a personal freedom standpoint, being able to raise your family the way you want to, not being limited. We walk around in Brickell without any concern. Some of the great cities of the United States,
even 2-3 in the morning.
Right? We leave clubs, bars. Exactly. Not that I do that too much anymore, but I'm never concerned about my safety, and I don't worry too much about my wife walking around. Whereas, she loves the West Coast, and I'm like, man, I'll go by myself, take care of business, and come back. Chicago, San Francisco, New York, all of these major cities that are being really impacted by legislation. And look at it whatever you want. This isn't about ideology, it's about the numbers. And we have seen that places that provide better landscapes and environments for businesses over the last 3 to 5 years have really, really thrived. And I think that for COVID, where about 50% of all businesses that were open prior to COVID ended up shutting down, right now the American economy needs an influx of new business and new money. And places like Miami are getting that, are bringing that, and everybody's benefiting.
Yeah, it's a good point that you said about during COVID. I was reading in Instagram the other day. I think it was in Bloomberg News or something. 18,000 millionaires moved to Miami during COVID. 18,000.
70. I think I read the same thing, and it was Miami-Dade has 75% more millionaires than any other county in the U.S. So
and 40 or 45 Forbes billionaires is from Florida.
There was I don't know exactly what it meant, but there was a headline on Bloomberg: Coral Gables beats Beverly Hills.
Exactly.
And I don't know what that means, but it certainly sounds good, right? It's the ritziest neighborhood in the U.S. is now Coral Gables, not Beverly Hills. And to me, that was huge, right? Because we've always been sold everybody knows 90210, or at least most people know that's the zip code for Beverly Hills, but most people don't know, the 33130s, the 331,
Or most people don't know that the most expensive zip code in the whole U.S. is in Fisher Island, over here in Miami.
300 people live on that island. It's crazy.
That's it.
The amount of wealth that already existed in Miami was enormous, and the amount of wealth that has transferred here in the last few years is enormous, and it doesn't compare to what has yet to come here. I mean, Justin, you talked about, you know, Citadel's 2 huge towers. They have barely transferred any of their footprint over here. They're like a 5,000 employee company, you know.
Exactly.
So it's like when they move, you have 5,000 people coming here, and 5,000 people were the lowest paid employee, you know, outside of like janitorial staff, are making $350,000 a year and above.
Yeah.
So I think that's the Miami that we're seeing built in front of our eyes. Exactly. Is the Miami for that go-getter. And for me personally, as an entrepreneur, I think that living here makes you step your game up. Because you walk around Miami, you see 12 Lamborghinis in 1 minute.
Exactly.
You see the watches.
It's like they're like taxis.
Yeah, exactly. And it's like, to me, I love that, because every single day, Miami's a city that motivates me to get out of bed at 4:44 in the morning, get my butt to the gym, work hard all day long.
About 4:44, right?
It's 4:44, you know, those angel numbers to start the day. But, you know, some people are upset, and I get it, right? Wealth inequality is something that exists. You know, it can be considered the price of progress in some way, but I think that Miami is a beautiful way to see the American dream, the new version of the American dream, because to your point, you know, 75% more millionaires, a lot of those people are young entrepreneurs.
Exactly.
The amount of kids that I meet, you know, that are below 30 and are worth $3, $5, $10 million here in Miami is mind-blowing.
Because of tech. Right?
Yeah, well, and so many things, from crypto to tech to actual businesses, even retail businesses, right? Like e-commerce.
Exactly.
It's very motivating to be here, and I think that you could look at the two sides of that coin. You can be upset about what other people have, or you can bust your butt every single day to try and get there, and that's what Miami does for me. Right. I wake up every single day and I'm like, I gotta get after it.
I was trying to find the article that said how much that lot that Ken Griffin bought was. That's literally like what?
Yeah,
2 blocks from here.
No, it's 326 million.
Well, there you go. I mean, come on, like. That's not just a normal lot and just anybody's gonna buy, you know.
And he's gonna, you know, and how much value are you adding to that when you erect the 2 towers, right? Like, that's gonna be $1 billion project by the time it's done.
Exactly. I think that would be like 2,500 units or something like that.
Yeah, something absurd.
The building looks crazy. And, you know, like Mercedes just came out with their renderings.
Yeah.
I think that's another thing that we see here is like the type of architecture. You know, we were at St. Regis, Brickell, the other day. 2 beautiful villas, a 3-story penthouse. Again, and the price tags are what, like $20 million for the villas?
Yeah, I think it was like 34, 40 between there.
Yeah,
and the penthouse in St. Regis was like 48, which is cheap compared to the other penthouses with the brand, you know?
I think that if you have the money, buy it. Because whatever you pay, again, we go back to the same point. Whatever you pay today, you'll be happy that you did tomorrow, 3 years from now, 5 years from now. And I think that the people that truly understand what is happening here, and like we live and breathe it because we walk around here every single day, and it's like you can't not see what's happening around you. The people that get it are buying and investing. And, you know, there's always going to be the chicken littles, right? The people that are saying, oh, the world is ending and the war and the stock market and there's a bubble. Yeah. If you have a long enough investment horizon, any investment you make in the city of Miami today will deliver amazing ROI the year of tomorrow, 5 years from now. And I say that with certainty, right? Like, obviously not financial advice, disclaimer. Don't make any decisions based on what you hear on this podcast, but the return profile of real estate investments in Miami and in certain particular areas, I think is, you know, there's not a lot out there that gives.
And also, when you look at all these brands that are coming and doing their like first residences, like Armani, Bentley, Porsche, Mercedes, there's gonna be BMW, all these like first like buildings in the world is starting from Miami. You know, I'm sure that they are doing all their research and everything, and that's why they are coming in here. So there's a reason. There's a reason for it.
You don't buy a $326 million lot.
Exactly.
Especially when you're the most successful money manager, which Citadel was in 2022. No single hedge fund was more successful at managing other people and their own money than Citadel was. So for him to make a $326 million bet, mind you, that's not even taking into consideration the $1 billion house that he's building in West Palm Beach.
Exactly. And he bought something down in South Florida also.
They don't stop, right? Like the billionaires are continuing to invest. There's so much that the city offers from the events. We went to the Miami Open. They were building the track for the F1, which obviously is a huge attraction. And an attraction for people with money, because the tickets for F1 are not accessible, right? Like it's a big money ticket, and they sell out. I bet you there's people who put it on their card and can't pay it for a year, but as long as they get to go, you have 5 professional sports teams. It's a business and tech hub, which it never really was before. Accessible from a tourism standpoint as well as a commercial standpoint by plane, train, automobile. The profile of Miami as a city is about as sexy as it gets.
Yeah, exactly.
Yeah,
100%.
And to kind of talk a little bit, we've talked a lot about the pre-construction and all the stuff that all the new projects that are coming. But let's talk about a little bit of the inventory that's now that is already built. I know Diego kind of posted something the other day with Brian, and it was like talking about like the Brickell market and how that change has happened in the last few months. If you want to kind of give your take on that.
Over the last few months, especially the month of April, homes have increased, like the sales price have increased like over $100,000.
Yeah, so. I actually did the math. Thanks for posting that, because I stole the data. But essentially, the average condo transaction in Brickell is up 37% from like 600 and some thousand to like 880.
Mm-hmm.
And to your point, about 100,000 of that $250,000 jump was in the last 30 days,
which is nuts. I
mean, it's crazy.
It's bananas.
That's crazy. I mean, the fact that we're seeing this market continue to grow. Where others, like you said earlier, have kind of like stabilized or decreased a little bit. Mm-hmm. I mean, it shows the potential we have to continue and to be the city that people want to move.
Exactly, but there's like 100 to 150 people moving to only Brickell area. Mm-hmm. Of course, the prices are going to keep going up.
Exactly.
You know? Yeah,
it's overcrowded.
And you know what? To that point, and I say this to people. Luckily, I could walk from my place to the office, and I think a lot of us here can. Yeah. You notice it on the highways, right? Yeah. We went up to Orlando and we drove back, and we got back into Miami at like 2:30 in the afternoon, and there was like, standstill traffic on 95 on the way in for no reason, right? Mm-hmm. On a Wednesday at 2 in the afternoon. Yeah. But here in Brickell, it's not like New York where like you could barely walk up and down the street. Like, it doesn't seem to be overcrowded, even though we're getting all of these people.
Exactly.
And I think that goes, for many years, Miami was a place where people invested but never moved, right? It was like the European, the Latin American,
mostly international.
International investors who, again, had that, I don't care, I could park $3 million here for 10 years and I know I'll make a return, but they didn't move there, right? Now we have a different type of buyer. Now we have a buyer who's moving here, and not just themselves, but with their families. And I think the local businesses are benefiting from it. It's worth mentioning also that there are a lot of businesses that have closed. And I think that the season was down a little bit in 2023, but I always tell people 2021 and 2022 were not normal years. No. There was so much pent up, liquidity from actions that the Fed took to, money that people didn't spend in the years of the lockdowns. Those were crazy years for spending in general. We look at what the stock market did. We see property value. But if you look at Miami-Dade, South Florida, property value where it was a year ago to where it is now, we're still trending upwards. And a lot of major cities in the U.S. can't say the same.
Exactly.
So I just want to hit 2 more marks before we finish the podcast today.
Sure.
Just kind of want to see obviously we've touched on it a little bit, but what advice do you have for people who are kind of on the verge? They want to invest, but they're kind of like, is it the right time? Should I right now? And kind of what is your guys' opinion on that? Because I obviously as realtors we're going to say yes, buy.
The time is now.
The time is now. We want to make that commission, but as a person in the industry that we see all these new projects, we see the growth, the potential that Miami has on a human connection to our clients and to these investors. What is your honest opinion on what they should do?
You have to look at it mathematically. Like if there's 600 people moving to Miami or 1,200 people approximately moving to Florida every day, that means that the price is gonna keep going up. So it's good to invest at the right location at the right time with the right brand. That's what I think. you know. I think Miami is gonna keep growing and growing because out of that 1,200 people, like 500 to 600 of them is moving to Miami, and all these out of Fortune 500 companies, 135 of them move their headquarters to Florida, and it's gonna keep growing. It's not only like tourism or investment and everything. Like all the rich Americans are moving over here also. The corporations are moving, so it's gonna keep booming. For that reason, the square feet prices of the houses, I think, gonna keep going up. Even in the projects right now, there's like certain brands like Mandarin Oriental and all that. Like they are selling from $2,000 to $2,500 per square feet. You know, and it will, when those projects are finished, probably it will go up to $3,000 or $4,000. You know, so I think it's smart to get in from a pre-construction. I like pre-construction personally because you get the first pricing, and then after 4 years time per annum, like you can get like 20 to 30% if you're getting to a good location with a good brand, and you can even multiply your money in 4 years time.
Yeah, I think that's a great point. And my advice would be, if you can, you probably should, right? Like if investing in real estate is part of your investment thesis, Miami is probably a place where you want to get some exposure, right? And maybe you don't put all of your eggs in one basket, but I think Miami gives you could buy pre-construction, you could buy luxury, you could buy short-term rental, you could buy in a condo hotel. Like there's so many different things within the market. And obviously past performance doesn't guarantee your returns in the future, but what we have seen, the historical data tells us that cities, when they sit in the position that Miami is in, Miami's like 50 years old if you think about it. 1980 Miami versus 2020 Miami is night and day. I mean, think about Miami in 1950.
Yeah, of course.
Right? Like it was literally mangroves and like little
village,
in Coral Gables. A tiny, University of Miami back then was a tiny private university. Fast forward 50 years is what can we do in the next 50? Like that's what I keep telling my clients to ask themselves is, look at what Miami's done in the last 5 years. What do you think it can do in the next 10? And if that aligns with your investment thesis, then definitely Miami is a place that you should invest in.
The time is now. Simple.
Exactly. Yeah.
That's it.
Perfect. So just we'll move on to the next segment, which is just kind of predicting where we see the next quarter. Let's not talk about the end of the year just yet. Let's talk about Q2. Where do you guys see Q2 going? Where do you see the movement of residential, commercial, rentals, whatever comes to your guys' mind? Where do you see that for Q2?
I think that, so if we look at Miami-Dade County, residential, average increase in property value for residential was about 22% in 2023. Condos was about 19%. I would expect that velocity to continue, if not to improve. And I think that we've seen it, back to Diego's post, in the first 90 days of the year, property value has gone up.
Exactly.
I believe that in the next 90 days, we will see the same, because I don't think this phenomenon is going to end. I don't think Miami's a fad, right? Like, I think Miami will continue to be an attraction for investors, for families, for tourism, for companies, etc. And I don't have a crystal ball, but if I had to bet on whether Miami's going to continue to improve and appreciate from a real estate perspective versus do I think Miami's going to take a tumble of 3, 5, 10% in the next 90 days, I would put my bet on the horse. That means, we're going to continue to trend up.
Exactly. And also when we look at the occupancy rates in the hotels or the rental wise, Miami is number 1 in the world. It used to be Dubai. Now it's with 97%, as far as I remember, is number 1. So, and rental wise, it just rents in a week or so.
Exactly.
There's like no inventory, nothing. So, of course, the prices are gonna keep going up, and everything is gonna boom. That's what I think.
It's like you go to Wynwood on like a Wednesday afternoon at noon, and it's packed.
Bro, it's slammed
everywhere.
It's insane.
We were there. I had some family visiting from South America, and my uncle from Argentina was like, "Aquí la gente no trabaja." He was like, people don't work, and I'm like, it's 50% people who don't have the need to work, maybe.
Or they work from home.
And the tourism, dude. Like we were meeting with a big real estate fund in Orlando last week, So they have, they've got like 18 million invested in Orlando. 74 million people went to Orlando last year as tourists, which is a huge number. And Miami's a little bit below. I think Miami was like in the range of 50 million. But when you think about all of the things that are continuing to happen in this area, it, again, obviously past performance doesn't mean anything, but I think we're going to continue to see these trends of occupancy rates being high, of listings staying up for shorter and shorter time periods before they're purchased, and that price per transaction to continue to trend.
And also, we have to mention Miami is the cruise capital of the world. There's like 8.5 million people using the cruises, and it keeps going up. I think like a year ago it was 7.5, now it's 8.5. Yeah. Maybe next year it's going to be 10 million, I don't know.
And I mean, that's the cruise expert.
I mean, based on what Cengiz is saying, I mean, that's true. We saw an increase from like 7.9 mil, I think is what it was for 2023.
To
8.5.
Yeah,
to 8.5.
It's like 10% increase.
Yeah, and I mean, that's only that they've increased basically one cruise ship in the Icon of the Seas, and they opened obviously Virgin, which has picked up its pace. But I mean, come on, like if all these guys are coming out with a new cruise ship a year, just imagine the numbers.
That's what I was going to say is the Icon of the Seas is the new big one, right?
Yeah.
Like, bro, if you look at that cruise, it's literally, it's mind-blowing that thing is made of metal and it floats. Right?
Exactly, with thousands of people, right? Like 12,000 or something. I don't
obviously, it's pure physics, right? But to me, that blows my mind. Like, whenever I'm sitting or driving by the port and I see these enormous things that weigh like thousands of tons, like the Icon of the Seas is a freaking huge boat, like enormous boat in the context of cruises. So it's like you see every industry that we rely on is getting bigger and bigger. And I don't know how many thousands of people it fits, but like the fact that you can get that many people on one vessel on water is crazy.
Yeah, I saw a post the other day on Instagram that it was like comparing like every year, like from the Titanic all the way to now, to like the Icon, bro. It's nuts. It was crazy. But on that, thank you guys so much. Appreciate your guys' time and all your input. Remember, guys, check us out on social media, YouTube, Instagram. Hear us on Spotify, Apple Music. Check us out everywhere.
Or come visit us, 848 Brickell Avenue, PH1.
Yep, exactly. We're here. We're waiting for you. Remember, the time is now. See you guys.
Let's go.
Bye.
This is the Time Is Now podcast, presented by IRG.